and welcome to EBAday 2019 in Stockholm. I'm Hannah Wallace, and kindly joining me now in the TV studio is Marcus Hughes from Bottomline Technologies. Hello Marcus, thank you very much for joining us.
Great to be here, thank you for inviting me.
So the first thing I want to talk to you about are some of the things banks are having to protect themselves against: AML breaches, cyber attacks, fraud, but also big fines. So to start off, can you tell us how should they be looking to protect themselves?
Well, cyber fraud is a big problem, with many banks and organizations suffering from cyber attacks. Cyber fraudsters are increasingly sophisticated. They're using malware and other stealth techniques to hide their illegal activities. Banks really need to step up their game to keep pace with these fraudsters and criminals. And they need multiple layers of defense. Obviously, policies and training are important, but actually it's technology which has a key role to play. One interesting innovation is to monitor not just transactions, but also employees, and to look out for abnormal activities as a possible sign of fraud. So in that context, profiling and machine learning can be used to learn and to constantly update themselves on what is considered normal activity, and therefore to identify potential frauds and to raise alerts for that. So just like a CCTV, a good fraud system can scan and record and replay any screens that have been modified, such as account details, or indeed actually screens that have been visited by a user, even when they haven't actually tampered with anything. All that can be recorded and replayed. So this gives a bank a good level of protection. So on the anti-money laundering side, that's obviously a challenge, and banks have been suffering large fines, which is rather worrying. And so they need to, again, upgrade their systems to make sure they've got better control in place. Some banks are finding it a good idea to use cloud-based sanction screening software, which enables them to screen in real time payments coming in and payments going out against constantly updated sanction lists. This puts them in a much better position, because with the situation today, with the volatile political world, with trade wars going on, literally sanction screen listings are being updated daily. So banks need to keep pace with that, and as a result, technology can help them.
All right, and another thing banks need to think about are real-time payments, but also payment institutions. What should they do to get to market quickly and efficiently when it comes to real-time payments?
Well, real-time payments is a hot topic, with more than 20 initiatives around the world in real-time payments at the moment. In the UK, we've pioneered real-time payments. We've had faster payments for 10 years now. Last year we processed £1.7 trillion worth and 2 billion transactions. And actually our payment system regulator helped encourage that growth, because it wanted to promote innovation and competition, and also to encourage more banks to access faster payments. So they introduced something called the New Access Model in 2016, which was really an outsourced system provided by a fintech cloud-based offering to give banks a true real-time 24/7 access to faster payments, and therefore make it easier and more cost-effective for them to get that access and provide faster payment services. We at Bottomline were one of the first service providers to become accredited as an aggregator service provider, and we've put 6 banks and non-bank payment institutions onto the system in that time. That universal aggregator is also importantly able to make it easy for banks and non-banks to access multiple payment and security systems. So Euroclear, Target2, Visa B2B Connect is a recent one, and it's really been quite an innovation. We think also that will be interesting in Europe as they move into real-time payments, because they have now both in the EBA clearing, and also, of course, the clearinghouse in the US are planning to use technical service providers, so based on the model that's been developed in the UK. There is a twist to the UK story which is worth mentioning. I think that demand has been high for businesses and banks to join faster payments, but there are only a limited number of slots at the Bank of England in faster payments. which has meant that, and there are in fact no slots left for the remainder of this year. So we had to be creative and develop a solution with one of our partner banks, with Starling Bank, which has already been using our faster payment system for a while now. And this combination has meant that we can help banks to access real-time payments without going through the headache of actually becoming a full member of the scheme. This compares very favorably with the existing agency bank arrangements, which generally are batch-based and therefore are slower and more prone to downtime. And I think that this shows that there's a really big opportunity for real-time payments here in Europe and in the US, of course, as well. So we're seeing how we can apply that model with Starling in other geographies.
Okay, and coming to regulation, what's your take on PSD2? Do you think it's a compliance exercise or an opportunity for innovation and growth?
Well, I would say it's both. I think to begin with, the banks looked upon PSD2 as just a compliance exercise, but then quite quickly some of the more commercially minded banks realized this was an opportunity for them to grow their revenues, to develop value propositions for their customers, and to strengthen those customer relationships. So they had to. This is good news and bad news for those banks, because now they've not just got to comply with the regulatory aspects, such as regulatory technical standards, strong customer authentication, APIs, and so on. They've now got to develop compelling customer propositions. So the good news is there's more work. So the good news is that is where the money is for those banks, in that they will be developing customer propositions to generate revenue. And unfortunately, the bad news is they've now got more work to do. So I think when PSD2 was first talked about, there was a fear that some of the fintech providers would come in and be faster moving and come in and eat their lunch. I think actually now that hype is generally over, and you're more likely to find fintech providers and banks having lunch together and deciding how they can get more done by partnering together. Certainly at Bottomline, we've had long-standing customer and partner relationships, and I think those partner relationships with banks are becoming increasingly important.
Well, as you say, with all of this going on, it's no wonder that banks might experience sort of a project overload, as it were. So what advice would you give to banks suffering from this?
Well, I think the payments landscape is going through unprecedented change, so it's fully understandable that banks might be feeling a sense of project overload. They're a highly regulated industry, so naturally they've got to focus on compliance primarily, and that's what gets the lion's share of their budget, leaving relatively limited funding available for discretionary spend. That's obviously bad for innovation, so they've got to realize that they can probably work smarter by partnering up with the fintech providers who have the experience, the cloud-based solutions to help with this digital transformation. They can help with the compliance side, with AML that we've looked at. They can help with PSD2, for example, helping banks to verify that the identity of the third-party providers who are connecting with them, and to establish what services those third-party providers are entitled to provide to their customers. And likewise, the fintechs can help with the value propositions which banks need to be developing to generate their revenues. And in doing that, they really need to be looking at the pain points of their customers, and also to avoid using the classic terminology which banks so love, the 3-letter and the 4-letter acronyms, some of which are rather ugly, I'm sorry to say. And they really need to be thinking about how they can help and talking in terms that their customers can understand. So helping improve cash flow, helping an online merchant to reduce their credit card fees by migrating their customers towards bank transfers, by easier reconciliation, faster cash flow. All those things will help. What banks, I think, need to recognize in this modern era is they can no longer do it all themselves, and there's therefore an opportunity now for them to partner with fintech providers, especially in this era of digitally connected ecosystems and marketplaces, and with those fintech they can work faster and smarter.
Well, Mark, it's certainly some very good advice there, and thank you for your insights. I'll let you get back to the event. Thank you.
Thanks very much indeed. A pleasure to meet you.